I really think Nvidia is quite attractive here.
Let's talk more about tech in light of yesterday's market sell-off. For insights on the mega caps and more, let's bring in Dom Rizzo, portfolio manager of the global tech fund at T. Rowe Price. Dom, thanks so much for joining us. Good morning.
Good morning. Thanks for having me, guys.
Yeah, I want to pick up where Dom and Becky just left off there with Nvidia. Calls for at least maybe some opportunities in terms of valuation. Do you think Nvidia is more attractive right now at this valuation, or do you think there's still some legitimate concerns out there about AI, DeepSeek, and lower price models?
Well, I really think Nvidia is quite attractive here, and there's a couple of reasons why. Well, let's take a look at the valuation first. The stock is trading in line with the SOX index now, and is trading at only a slight premium to the S&P 500. If you look at it historically, that's historically where the stock's bottomed on a valuation perspective. But more importantly, we have improving fundamentals from here. Gross margins for Nvidia should probably bottom in the April or the June quarter and improve to that mid 70% level as we head throughout the rest of the year. And then if you look at the supply chain, things are actually looking really positive for Nvidia. So, Han Hai reported its February numbers this morning. They're the biggest, partner for Nvidia, and the February numbers were up 56% year over year in terms of revenue. And then if you look at the fundamentals of other parts of the supply chain, memory prices are starting to increase for both DRAM and NAND, both up mid-single digits off the bottom. And then finally, probably most importantly, if you look at Nvidia's revenue growth from here, we're going to just keep seeing sequential acceleration. So I kind of put it together, and I like the setup in the stock.
Yeah, and we had that raid in Singapore where it turns out that the chips being sold to Singapore were finding their way in China. Do you think the administration here and what they could do with Nvidia further restricting chips, even perhaps the cheaper chips that they're allowed to sell to China right now, should that be a concern for investors at all?
Well, looking at the fundamentals, what's happened since DeepSeek, if you look what's actually happened since DeepSeek, is Nvidia demand has gone through the roof, both in China and in the US, right? So if you look at the supply chain, H20s, those cheaper chips you were referencing, the demand for that has really surged since DeepSeek. And then if you look at what's happening in the US, Hopper pricing and all the clouds has gone up. So Nvidia is clearly the biggest negotiating leverage tool that Donald Trump and the administration have with China. It's one of a few, and I think it'll probably be part of a grander bargain in terms of the China deal.
Dom, when you look at the companies that are doing all of this spending, and obviously the customers of Nvidia, like the cloud platforms, really interesting divergence in terms of how the market is treating them. You have Alphabet right now trading at a 10% discount to the S&P. Rarely seen that through history. Meta, on the other hand, has seemed like it's gotten it all figured out. Are there opportunities you see in those divergences, or how do you think about that group in general?
The issue with all the hyperscalers right now is that CapEx intensity has to continue to increase, right? And frankly speaking, Nvidia is going to capture a lot of that economic value from that capital intensity increasing. I think the reason Alphabet struggled so much is really a function of its search business more than anything else, right? Just think about your personal day-to-day experience. How much more are you using ChatGPT and Perplexity relative to Google search? My gut is probably a lot. And so that search business is so big. And if you look last quarter, that grew 12% year over year. I'm not sure that search business can continue growing at 12%. So yes, I like YouTube. Yes, I like the cloud business, but it's really the search business that is under attack, which has historically been one of the best businesses of all time, frankly. And if you look at Microsoft and Amazon, all three of the hyperscalers were capacity constrained this quarter. They actually would have sold more in their cloud business if they had more chips from Nvidia. And I think that's partially the Blackwell delay, which should improve in Q1. And so of all those three, I personally think Amazon's the most attractive. We have a few different moving pieces for Amazon, but most importantly, I think operating margins continue to improve throughout the year for Amazon.
Joining us to discuss and shed some light on this sector of the economy right now is Logan Gilland, an analyst at Jewel Financial. Logan, thanks so much for joining us today. I wish we were talking on a more upbeat day. Sentiment has not been in the favor of the semiconductors this week, but where to even begin? Let's start at the top with the behemoth, the king that is still Nvidia, which I will still call it the king. I know it's pulled back substantially, but it's still, as massive of a company as it gets, and it feels like every earnings reaction we get somehow trickles into Nvidia. Like I was reading this note, Marvell, Nvidia, Broadcom, Nvidia, it's all tied back to Nvidia.
It absolutely is, because they've been the leader in the space. They've led the market for the last 2 years. It all points back there, and that's what the market is generally watching. I think that's what a lot of retail investors are watching too on a daily basis, is what's going on with Nvidia, this company that got a lot of exuberance as we are entering into this year of, holy cow, you got to be a part of AI, you got to be in this space. Buy Nvidia, because that is the future of AI. That's where you need to be. But obviously, it had already ran for 2 solid years straight. I think it's fascinating when we're looking at these earnings reports, and we'll talk about Marvell in just a second. But even if we go back a little bit to that Nvidia earnings report, it was really strong. I mean, I know the company sold off after the news, but the outlook, what they said was really strong. The problem for the markets is it's like basketball in March. They hit a bank shot, they didn't hit a swish, right? There was a little bit of, hey, there might be some chinks in the armor, and at the same time, there's a lot of uncertainty right now. I know you've heard the word uncertainty a million times today, but there is a lot of uncertainty, particularly in the AI space, because it's not just tariffs. It's also DeepSeek. It's also what is China doing. It's also, is there going to be some softening in this market over time? I think what the earnings report that NVIDIA had does tell us is that AI is not going anywhere. I mean, it was still strong enough to say that. However, these hardware chip type companies could see some issues as it's broadening out to different companies, as we're seeing maybe the focus shift from technology to maybe, or even hardware chips to more software style chips or other places of the market. And right now people are looking for safety with all the uncertainty that's going on. So I think we could continue to see pressure in this hardware chip space, even though these companies are gonna stay elevated, they're gonna stay in the game. But I think a pullback was well overdue with some of the exuberance we saw in the market, let's call it a couple months ago, where people were just clamoring for these type of names. And some of those people have to get hurt for there to be a healthy market. And this kind of pullback is playing that out.
What I kind of think might be happening, I'd love to get your thoughts on this, is that there's just a rotation out of these names when it comes to institutional money. All the rallies that we're seeing are getting slammed back down. And it doesn't make either side of the trade illogical. If you've been watching from the sidelines and you just seen a name like Nvidia come from 150 to 110, it looks cheap to you. But if you've been in this trade for a decade and you've rode this entire thing to the upside, maybe now is the time. All the uncertainty that you're describing in the market, providing that excuse to look for other opportunities in the market. Do you think there's any truth to that? That it could just be, some big, maybe outsized positions that have been built over the years from an institution standpoint are being diversified out of at the moment?
Yeah, I mean, I think anytime you have fear in the market, you do have that. And people are like, wow, I can take these profits that I've had on these companies for a very long time, rotate out of a name like NVIDIA and move into something that's slightly safer in a different area. Or maybe even bonds for now as a holding pattern. Now, again, I don't think that these companies are going anywhere, but I'm not jumping on them right now, because if you start playing the game of, oh, this has gone down too much, it can't go down further, then you have a company like Marvell come out, and before the earnings report, people were saying, oh, that's been sold down too much, and then we see it down 17% today. So there's reactions that can come from this as expectations have to reset a little bit. With these hardware chip companies, the bar has been set so significantly high that there's a little bit of coming back to earth and saying, okay, well, do we need to reset the bar? Do we need to understand what the outlook is for this? Because it was just running as hot as possible before. So I think we have to take our time. And if you're an investor out there and you're just saying, oh, NVIDIA is down, it's been down, it's down 20% year to date, I need to just jump into it, I would be very careful. I would watch it closely, see how this plays out, see if we can get some more certainty in some different areas before you jump into one of these hardware chip names.
Yeah, and I totally agree. I think that this market right now is almost like punishing the most successful. It's like the NVIDIA's unfortunate success is now it's in detriment because it was just so exuberant. You said, I mean, its valuation was ridiculous, and it felt like every dip we saw in the market, it was like NVIDIA's higher for another session. But even outside of NVIDIA, now we have, of course, Broadcom out after the close. I mean, is this now a massive risk? Because I look at Marvell and I look at some of the other names that have reported that, hey, gave no fundamental change as far as like outlook and tone and just got wrecked. I mean, is now Broadcom next?
Yeah, I think you're getting sell the news actions. Obviously, Broadcom is reacting to the Marvell news as well. So you don't know exactly how their numbers are going to play out. But I think you are, again, getting kind of that sell the news action where a company that's coming out with earnings, if it's not pristine, perfect, again, if they're not shooting the three-point shot and it's making it all net, no rim, if they're hitting a backboard even at all, we're worried about what they're going to miss on the next shot. And that's kind of what's happening, and that's the rotation I think you're happening in some of these names where people have been holding on to them for a very long time. They've done exceptionally well, but now they're getting a little bit concerned. Or you have people that have entered these names at the beginning of 2025, where they just thought they could make a cheap buck. You throw a dart at the wall and you make money, and they just jumped into these names without understanding the fundamentals or really diving into the name further past, oh, I can make money in this AI new play. Semiconductors is the place to do that. We're of the opinion, I think it's going to spread out. AI is still going to be profitable for a lot of companies, but I don't think necessarily the hardware chips place is the space to be playing the AI trade.
And I think that right now a lot of the street agrees with you, because I do think such an important differentiation between the various ways in which we'll see like the tiers of AI winners. I think the rising tide that lifts all boats for AI has maybe perhaps come to an end. So an agreement there, but great breakdown here on the semiconductor space. We'll have you back and we'll talk about things hopefully rallying when we talk about this again. But obviously a day of pressure. Logan Gilland, thank you so much, analyst at Jewel Financial.